Hey YouTube, Jason here with Day Trading Fearless. Welcome back to my channel. If you're new, welcome. Make sure you guys hit the like button and also subscribe. And all these option videos are sponsored by myself. So these are the weekly trade zones for the S&P Emini futures. $50 one-time payment for a lifetime subscription. I've been doing these for about 7 or 8 years now. And every weekend I send you all these trade levels. Again, $50 only. Go to daytradingfearless.com or click the link down below in the description. And also make sure you check out my Patreon page at patreon.com/daytradingfearless to follow along with my trading portfolio. So, with that being said, let's jump into the option video course, and I hope you guys enjoy it. And thank you for watching. In today's video, we're going to talk about getting long or buying puts. Okay, now remember, all a put is you're actually you're buying in a put option hoping that the stock price goes lower. So it's the opposite of buying a call, right? When you buy a call, you want the stock price to go up. Here, when you buy a put, you want the stock price to go down. So your market opinion is going to be bearish. You want the price of the stock going lower, and you will always pay a debit for buying puts. A put option gives the buyer of the put the right, but not the obligation, to short the underlying stock at the option strike price. The seller of the put is obligated to take delivery of or buy the underlying stock at the option's strike price to the buyer of the put when the buyer exercises his right. You will want to buy a put if you think the stock price will go lower. So, again, just keep it simple. You buy puts when you want the stock to go lower. Okay? So, here's an example. Let's say you buy one XYZ stock, October 20 put, for a $1 debit. Remember, whenever you're buying calls or puts, you're always paying a debit. The max profit would be $19 if the stock goes all the way to zero. In your max break, in your break even is if the stock closes at $19. So if you're saying, hey, I'm willing to short the stock at $20. I'm paying a $1 premium, okay? And that's how we get to our $19 break even. Anything below $19, you start to make money. So, and that's at expiration, right? Now, an example would be stock XYZ is trading at $20, and you think in the next 1 month, in the next month, the stock will trade well below $19. So you could buy the October 20 put strike, okay, for $1, which means that your maximum loss is $1, or remember, it's a multiplier of 100, so it'd be $100. And you will need the stock at October expiration to be below the $19 to break even. And you also have the right to sell the stock short, right? You could get short the stock at $20, and if you want to exercise it, if we are below $20 at expiration. If by October expiration the stock is at $15, then you could close out the option with a $4 profit, the difference from your break even to your closing price of the option, right? So remember, stock's at $20, you buy the $20 put, you pay $1 for it, so that gives you a break even of 19. If at expiration we're trading at $15, from 19 to 15 is $4 max profit. So with that being said, let's take a look at the charts, and we'll come over here to Viacom, okay? And let's say So right now, let's say we think the stock's going to go much lower, right? Let's say we think it's going to $35 in the next 29 days. We would then go, okay, the 40 puts, we would buy it for, we'll say 249, okay? Remember the mid price is 245, but we'll use 249 here, okay? And let's see what this looks like, right? Buy one Viacom, May 2040 put. Okay, our break even is 37.51. Remember, take this number, the strike price, minus what we paid for it, and that gives us our break even. Okay, the max profit would be from the break even all the way to zero, which would be $3,700 if the stock went to zero. And our max loss is only what we pay for it of $249. So with that being said, that is kind of what it would look like when you do buy puts. And to keep it simple, whenever you're buying puts, you want the stock to go lower. So that's it for this video. We'll see you on the next one.